to ease by accident on purpose, but
Gotta hear both sides. I don't know about that.
to make sure I was trying not to let you catch that, but yeah, but I'm telling you, y'all. All right, I'm gonna mute myself and let King do his thing.
I appreciate that, Neil. No, but it's all good. Like I say, it's Wednesday evening. It's not a lot of us in here tonight. So if you guys have a question, just stop me. I prefer that if I say something, you have a question, that we address it then, because I don't really want you to hold it and wait, because most of us on here, our minds are 30 plus years old. So I don't want to have to rely on our memory to remember the question, to try to remember what. If you got something to say, just raise your hand, or just come off mute and we'll address it there. Like I say, since this is just a handful of us, we can just go through it piece by piece. Cool. And half of you all seen this already. So I know Victor's gonna have some questions. Alicia, I don't know what you're doing, if you're at work or not, but if you got questions, come on. No such thing as a crazy question. Okay. All right, so let's get this thing started. I am recording. Cool. Share. Okay, can everyone see this?
Yep.
Yeah.
Yes, cool. Okay,
Yes.
perfect. Oh, wow, I put you all, this is crazy. I put you all on widescreen, so now I'm looking at the class. Oh, this is too much. How do I do that? How do I get this? Oh, man. Yeah, I'm still learning how to work this Mac, y'all, so bear with me. I put the meeting faces on the 49 inch, so it's just all right. Let's go with it.
Try to stop sharing. I think that should minimize it or give it back, put it back to normal.
Okay, let's see.
Did that work?
No, Neil, it didn't.
Oh, sorry.
It did not. It absolutely did not. It's all good. I can move the screens over. All right, cool. So let me share again. This is crazy. Man, I'm acting like we don't do this. Like I haven't done this multiple times, man. Y'all bear with me, man. Okay. Is that good?
Yeah, you good.
Cool. So trading psychology masterclass is just what I titled it. It's just a deeper understanding of trading psychology, and it's important, okay? So disclaimer. This is not financial advice. It's for personal investment and educational purposes only. I am not a financial advisor. I cannot tell you what to buy or sell. All investments have risk, and it's important to conduct your own due diligence while practicing risk management. Okay? Like Neil always said, please keep in mind, these are the things that I've found useful, right? This is the things that I use, the tools that I use, and I'm sharing them with you all. Okay? Cool. All right, so let's talk about what is trading psychology. Trading psychology refers to the emotional and mental aspects that influence decision making in trading. In today's market, it is crucial for traders to maintain the right mindset to navigate through the market fluctuations like fake outs, reversals, manipulations, and manipulations. Sorry about that. To make rational, well-informed decisions. Emotions like fear, greed, hope, and anxiety often drive traders to make mistakes, even if they have a solid trading strategy in place. Understanding and mastering the trading psychology is essential to becoming a successful trader, and in my opinion, just as, if not more important than the trading strategy itself. Today, we will dive into the key aspects of trading psychology, common psychological traps, and strategies to develop a disciplined trading mindset. Any questions on that? Nope. All good? Cool. So, the importance of trading psychology, right? Why is this even important? Why is this even a thing? While technical and fundamental analysis are important for trading, emotional discipline can often make the difference between success and failure. According to experts, I'm the expert. No, according to experts, 90% of trading is psychological and 10% is technical. Even with the best trading systems, traders can underperform due to psychological barriers. Listen, the market is extremely unpredictable, and its and its movements are influenced by various factors, including macroeconomic data, geopolitical events, and investor sentiment. Any questions on that? Okay. This is the least question asking group that we've had, but if y'all got it, y'all got it. I know Victor is cooking up some, but if y'all good, y'all good. Vidal, what's up?
Hey, in due time.
Oh, none.
Oh, I saw the mic come off. Alicia, you good?
Yeah, I'm good. I'm following. I got
Okay,
a
cool.
question. I would definitely chime in.
Cool. Now, when I see those mics turn on, I always assume it's a question. It's funny that Victor asks a lot of questions, but that's a beautiful thing. That's what I want. But somebody in the last class, his name was Vic.
That's what I thought he was when you first said it.
It's kind of like I don't know if they playing a trick or what, because like how did we get to two people with the same name?
Nah, this is my first time.
Yeah, I know. No, this guy was from another country, but man, he made the class. But because like I say, ask all the questions you can because we want to answer them so that when we're not here with you all in the mentorship, then you have that stuff. So I don't mean anything by it. I like answering them because it's a challenge. And I don't know what you don't know or don't understand. So I don't have no problems with that. So this is something I call the 3 C's, right? So let's talk about this. The human brain is wired to react emotionally to uncertainty, which often leads traders to make impulsive and irrational decisions. In order to be successful in this game, it's going to require you to possess a certain set of skills and attributes. Here's a few, but let's break it all the way down. That sound familiar? Impulsive and irrational decisions. Cool. So the ability to stick to a good trading strategy and trust it, that's the confidence, right? The ability to control emotional responses, that's keep your composure. And the ability to combine both of these without wavering, consistency. Make sense?
Yep.
Cool. So, I mean, if you like, you can just remember that in your head, the 3 C's, or try to say those things to yourself as you're getting in a trade or as the trade is going on. But however, so let's talk about some common emotions experienced in trading. Okay, this guy, this is a graphic that I put here because this pretty much sums up everybody's journey. I know mine was like this. I had a lot of money, told the world, and then things happened. I was confused. I didn't really understand what was going on, and then that guy came. So she said, Alicia said she's in the middle. Yeah, it's usually how it goes. From A to B to C. But you did the right thing. Once you got confused, you reached out for help, right? You came to seek some knowledge, and I tried to do that, but I didn't do that very well. Were you gonna say something?
I was just gonna agree with you. Yes. Yeah.
Yeah.
I mean, that's because I started losing money.
Well,
I was I was
you're
on
smart.
top and then I started losing money and then I said, you know what, let's pump the brakes and let's see how this works, you know. So I think I saw an episode or I was on one of the chats where somebody brought up theta, and that's the part that I need to really understand when because I hold it too long and my profits got ate up. So yeah.
Okay, yeah, we're gonna talk about that throughout this mentorship for sure. But I can't commend you enough for actually reaching out for help when you were confused. you're a better person than me because I went and got more money. I said the market ain't gonna beat me. And yeah, and the market smoked me. So let's talk about it. Fear. Fear is one of the most important emotions in trading because it can manifest in two different ways. Fear of missing out, FOMO. That's one we all know very well, unfortunately. FOMO is the fear of missing out on a profitable opportunity. This leads to anxiousness, poor decision making, and overtrading, just to name a few. We all know FOMO. We all know FOMO too well. FOMO is probably why we got in the trade. FOMO is probably how we got in the trade. So, but this is another one that I think is important to talk about that people don't talk about a lot. Fear of loss, right? We don't really hear this one a lot. So, fear of loss is the fear of losing money may lead you, may lead you to exit trades prematurely, even if the trade aligns with your strategy. This often results in missed opportunities. Anybody ever experienced that one? Vic is shaking his head, yes.
Absolutely.
After my first big loss.
Yeah. It's like scared straight. you like, oh, $2, I'm gone. You listen, man, I get it, but we need to talk
I
about
took
this
one of them
more.
L's like you.
Say what?
I said I took one of them L's kind of like you.
Yeah.
And after that, it was kind of like, scared to get back in. And if you are, you're real cautious, or you see a good trade, don't take it.
Yep.
It's just like you're saying, it's all over the place after that. So.
Fear. Yep. Fear, like I say, fear should never be a part of your decision making and trading. If fear is driving you to make decisions, it will be very difficult to be profitable as a trader, and it also heighten your risk. Fear is not a strategy. fear of missing out or fear of loss is not a strategy, guys. So we have to be very careful. I know we all have experienced this one personally, because it's probably one of the first ones we encounter in this game. So let's go to the next one. Greed, another one we all know too well. Greed is the excessive desire for profit and often drives you to take irrational risks. Again, irrational risk. And this game is based on risk management, rational risk management. So irrational risk is never good. You may begin to ignore your risk management strategies, hold on to winning trades for too long, or enter trades without proper analysis in pursuit of more profits. This mindset can result in large losses when the market reverses. I don't want to hang on that one too long because it's probably you probably have seen this one recently. And I'm only saying that because I've had moments where I've had to calm myself down. Like, don't be too greedy. Just take it and live another day. This morning was one of them. Greed kicked in a little bit. I traded that first move down. I was done by about 10:30. So, ooh, I'm good with this. I said, I know the market's gonna keep going down, but I don't really care. And then it did what I thought it was gonna do, and it kept doing it. And everything that I had already played went another level. I was like, man, I really wanted to be greedy today, and it's just this game will trick you, right? This game will trigger those emotions on purpose because the market is based on psychology, and psychology is a study of human behavior. So if the market understands how humans are going to behave, it's easy to manipulate humans, right? Would that make sense? Yes. Okay. So we have to be very conscious that we're in a war not only with the computers and the quants, but with ourselves and our emotions. Okay. So let's talk about another one. Impatience. Many traders fall into the trap of impatience, expecting immediate results. Successful trading requires patience. As markets often move slowly, impatience can lead to overtrading, where traders enter and exit positions too frequently and deviating from the trading plan to capture short-term gains, ultimately reducing the long-term profitability. Make sense? Everybody good on that one? Cool. Pretty cut and dry. So let's talk about this one. I don't know if you guys have experienced this. Well, you probably have, but I don't know if you guys are aware that this is an emotion that happens that is You're being coerced into this, right? So after a series of winning trades, you can become overconfident. This overconfidence can make you more prone to taking unnecessary risks, like sizing up on positions or believing that you cannot make mistakes. Overconfidence often leads to complacency, which can result in significant losses when the market conditions change. Everyone takes losses. It's unavoidable in this game. Try not to combine that certainty with unnecessary risk. Just remember that. Losses are going to happen. It's just how this game is set up. But don't add to that by being risky. Okay. Overconfidence is definitely one that I know very well. Like I say, when I did enter options, when I did finally get into options, man, it was crazy how easy you could win. And I became overconfident and I thought I knew. And what happens is as you make these wins, you make more money. So you start sizing up on your positions, going harder, putting more money on the position. Or you start out with $1,000 position. Now you're making money every day. You end up 7K on the play, 10K on the play. And it's just an accident waiting to happen if you're not properly sizing up. So let's talk about the key components of a healthy trading psychology. Okay. How often do we hear this? All the time. This is the center stone of life, right? Discipline. Discipline is mandatory to become successful at trading. Discipline is mandatory to become successful at trading, right? You need to follow your trading plan consistently, whether in winning streaks or losing streaks. Discipline ensures that you do not deviate from your strategy due to emotional impulses. To develop discipline, you should set specific trading rules and adhere to them. Limit trading to preset conditions and avoid trading on a whim or without clear reason. Overtaking signals. Be careful. Signals are suggestions. They are not a roadmap. They are a suggestion. You should see what somebody else is looking at and take a look at it with your own eyes. Okay? And your own strategy. So we want to be very careful. Discipline is something we can't waver on. Well, you can, but when you do waver on discipline, your portfolio is going to show you. Okay? It's almost every time I go outside of my rules, I see some red somewhere. So let's just try to avoid that. Okay? We're humans, so yeah, we're not going to be perfect, but try to be as disciplined as you can be. And that's all I can really say about that. It's boring. It's crazy. You got to just stick to it. But it's just the way this game works. This game will reward you for following the rules, right? So let's talk about that. This game is so trading. Let's think of it as a machine, right? This is a money print machine or wealth building machine, whatever you want to call it, right? So just like any other machine, you must learn how to operate it correctly, right? Because if you don't understand how to operate the machine or you use it for its not for its intended use, right? Did I say that right? For its intended use, then something is going to happen, right? So if you have a car, a vehicle, whatever, any machines that you know, there are rules to them. And if you follow the rules, the machine does what it usually does what it should. If you don't follow the rules, it could hurt you, right? It could end up hurting yourself, killing yourself, whatever. Just remember the same thing for this game. This is a machine, and you must follow the rules. If you deviate from the rules, you're going to get an alternative outcome. Does that make sense? Cool. So, let's talk about emotional control. Mastering emotional control is essential for trading success. Emotions such as fear, greed, or frustration can cloud your judgment and lead to impulsive decisions. To manage emotions effectively, you should try. 1, take a break during stressful periods. I'll stop trading in a heartbeat. I have no issue with not trading for the day or days. Avoid trading during emotional highs and lows. Adrenaline should not be a part of trading. Adrenaline will trigger you to gamble and distort your judgment. Now, some adrenaline will happen if we're on the Fridays lives. Now we get a little excited sometimes. That's fine. That's excitement. But you guys know adrenaline, anytime you've ever met adrenaline, it was a fight or flight situation. And sometimes when adrenaline kicks in, you are doing things that are not logical, right? We see people like, how did they do that? Or why didn't he just do this? Well, because adrenaline was swarming around and he wasn't thinking clearly. So don't do that with your money on the line. Okay. So, oh, this is an important one. Keep a journal to record emotional triggers and identify patterns that negatively affect trades. So I know this seems simple, right? But I want you all, I don't care if it's a journal, a diary, notebook, whatever you have, scratch piece of paper, piece of mail, whatever you can write, you need to record how you're feeling when things happen, okay? Because you're going to have to go back and look at that data, and you don't want to have to rely on your memory to remember what was going on in a traumatic situation. Think about it. Anything traumatic you've been through, you only remember parts of it. So this is the same thing. That loss, you're not going to remember everything. So write it down, right? On top of a trading journal, but this is for your emotions so that you can go back and look at it and you may notice a pattern, right? You may notice, oh, I feel like this. I feel terrible every time I trade SPY or every time I trade this or trade that. Then you'll understand that it is this certain asset or this certain ticker that does this to me, right? And then that'll give you more data on how to kind of figure out if it's a good ticker to trade or not. Because again, if the market is based on psychology, certain tickers you just may want to stay away from. Kind of like how I always encourage you guys to stay away from SPY, but still do it. So again, write down your emotions. Like I said, I don't really care where you do it, but please keep a record of it so you can go back and look at how you were feeling during that trade, even the good ones. So then you'll understand better exactly what's going on in your mind and your body and all of that stuff. Okay, makes sense? Cool. Risk management. This is the heartbeat of this game. Risk management. Effective risk management prevents traders from making catastrophic mistakes due to emotional decisions. Successful traders understand that losses are a part of the game and use risk management techniques to minimize potential losses. Some key risk management practices include using stop losses to protect capital. That's something we hear all the time. I don't know how many of us use them, but it is your safety net. Stop losses are your safety net. They are there for a reason. And I'm telling you, if you run out of capital, you're not going to have any for the next day. You're going to have to go and make a deposit from the checking. So let's keep these stop losses in place so that we will have some ammo left for the fight, right? Because I'm telling you, it will be another day. If there isn't another day, then unfortunately you're not here and the money won't matter anyway, right? There will be another day. This market will trick you and make you think that the only day that matters is right now in this moment. Man, you hit that stop loss, take that stop loss, take the loss and come back out. Because tomorrow might be your day, right? Just hitting that stop loss might have shown you something or shown you a level that you didn't know was there. Now you understand it for tomorrow and you can play it. So limiting the amount of capital risk on a single trade. This is position size, no extreme size ups, right? Like I just said, if you got 10K in your account, should not be using more than 10%, maybe $1,000 or so. Go ahead, Alicia.
Yeah, that's what I was gonna ask you, limiting what is considered extreme. So if I have 50,000 to spend on one trade, what would be extreme? 5K is what you're saying?
If you have 50,000 to spend on one trade, you better have 1 point in that account. Okay. But if you have a $50,000 account, is I think is what you're asking.
Yes.
10%, that's not a bad rule of thumb. 10% or so, and I'll go into those a little bit later because I kind of change it based on and I'll talk about that in another down the line, but I kind of change it based on what I'm doing. If I'm doing a longer out swings or leaps, I
Yeah.
give those a little bit more capital because
Okay.
you're buying time on those, so they're gonna cost more. But day trades and things like that, yeah, I try not to go too much too high over 10 to 20%.
Okay.
Because and it's kind of difficult because like I say, once you all continue to do this, you're gonna bend the rules a little bit on certain things, right? Just not the discipline aspect of it. But certain trades I know I will go a little bit heavier on because I have multiple things confirming what I see. But starting out, yeah, I would say keep it to about 10%. If you got 10K in the account, $1,000 on the day trade is beautiful because 10% of that is $100, or if you make 100%, however, but the risk management part comes in because if you got 10K in an account and you, let's say you got a day trade or a short swing for 1K, right? And something goes catastrophically bad, like just a bad day, the market ran against you, you couldn't watch your position, something happened where now you're losing on that position. Maybe you're down 90% on that position and there's only $100 left on it, right? Maybe you couldn't get out in time. At least you didn't blow your account, because if you put too much money in at once, right, and something happens outside of your control and it takes your money, then now you can't go back at the market to get it back. If you put too much, you understand what I'm saying? If you put too much, if your position size is too large, you got a 10K account and you just spent 7 and it went against you and now you're down 65, 60, like you have no real ammo to kind of go back at it. Make sense?
Yep. Mm-hmm.
Yeah, so I say rule of thumb for now, especially starting out, 10%. Because if you 10% is what I'm gonna say. Go ahead, good fella.
Yeah. So how do you use your stop loss? I know everybody got a different method. Like some people set it like 10% under, the
Well,
price or whatever, the entry, and then some people use trailing stop. I mean, it's different
yeah,
stop
so I
losses.
switch it. I feel like that's a loaded question. You want to know if I use stop losses? No. Uh, yeah, so it
What
just
would you
depends on the
suggest? I
trade.
know it's different.
Yeah, it depends on the trade, but if it's a, and I, like I said, I cover that in another class, but if it's a longer out trade, I'll give it a little bit more room. But those day trades, I'm not trying to let them get down too far because it takes too much to get them back. And if they go against you, you're wrong. Just stop out. So to answer your question, 30% is usually where I'll go. About 30%. Sometimes I let it go a little bit further if I'm looking at the levels or I got more additional confirmation. But I would say 10 to 20%, 30% is, be careful once you get to 30 to 40%, because once you get to 30 or 40%, that's too close to 50. And you all know once that trade goes 50 to 60 to 70%, what do we say? I'm gonna just let it ride. At that point, I'm already down. It might come back. So you
Right.
want to be very careful. Like we need to be very this game isn't about being the smartest. It's about knowing yourself. And if you know at 70, 80%, you're gonna let it ride, then you need to stay away from 70, 80% as much as you can. So if you can't control yourself, don't give it 40%. Usually 20, 30% you need to be getting out of there, okay? And it's just it just is what it is. Hey Mink, she says she's at work, but she's tapped in. Good to have you. Cool, cool. So I hope I answered your question. Did I answer that? Good fella.
Yeah, that was good. You said you'll cover it a little more later. So, but yeah, that was
Yeah, we're gonna
basic.
break it all the way down, but I'm gonna say as starting out, anything over 20%, you start looking for the door, okay?
That's cool. But day trades, you're more strict third than more of like a leap.
Yeah, because day trades, you're gonna lose faster. right or wrong.
Right.
You lost more money on day trades faster than you did on those leaps.
Right.
Right. So if I know day trades, they the bad kids in the group. They get active. So if I know, so we not even gonna let that, we not even gonna start that. You start going the other way, we gotta figure it out. Okay. But just be careful. So diversifying trades to spread risk. This is another big one. I don't go too heavy in one sector or in one ticker, right? You shouldn't have all NVIDIA in your portfolio or all tech in your portfolio, because if something happens to NVIDIA, it's going to happen to you. If something happens to tech, it's going to happen to you if that's all you have, right? But some days tech might be down, finance might be up, or retail might be up, or health technology might be up. So just kind of spread. Don't, like they say, we've been hearing this all our life. Don't put all your eggs in one basket, right? Cool. So that's what I mean by diversifying trades to spread risk. Everybody good on that? Everybody following me? Cool. So patience. The best traders know that trading is a marathon, not a sprint. Patience is required to wait for the right setup to avoid overtrading, right? So you must learn to accept that markets take time to reach their reach their targets. Wait for high probability trades rather than forcing trades, and stick to your trading plan even when the setups are rare. Stick to your plan. You have a plan for a reason, right? If you, what they say, fail to plan, you plan to fail. If you have a plan and you decide that you're going to use another plan that you haven't thought out, like the first plan, probably not going to end that well for you, right? In this game, it should be kind of boring. It should be kind of like on and off, for in a sense. And so we don't want to get into forcing trades or trying to deviate from the plan. Because usually what'll happen is you have a plan, then you go and do something else because you got a bright idea, and then that doesn't work, but then the original plan works. And what do you think happens to your brain when you do that? Scrambled. Get cooked. So we don't want to do that, right? We want to keep our emotions in check. So we're gonna be careful not to do things that are going to trigger us to respond emotionally. Okay. And deviating from the plan is like, if we on the way somewhere and we got a plan to go there, and then in the middle of it, I say, let me out, I'm gonna go here, you're not gonna know how to adjust. Wait a minute, I thought we were going here. What are we doing? So don't do that to yourself, guys. Right? Cool. So let's talk about overcoming some psychological barriers, right? So he could be this guy. He's happy. You gotta see him. He's happy. He's a happy trader. He's not like the first guy who's sad. Cool. So handling losses. I know a lot of you all probably heard me say you gotta learn how to become a good loser. Okay? You gotta learn how to become a good loser. Losses are inevitable in trading, but how traders handle them often determines their long-term success. You must view losses as learning experiences, not personal failures. This is my I don't have any losses. This is my philosophy in life. If I take an L, it's a lesson, because if something happens alternative, I'm going to learn from it so I don't do it again. Okay. Only thing that I've done that over and over again was this. So I'm telling y'all, don't do it. Like, you don't have to. But every loss, it could be a learning experience. Okay. Avoid revenge trading. This is where traders attempt to recover losses by making irrational, high-risk trades. I know everybody on here has done it, and it did not work out. It rarely works out. Revenge trading is not a strategy, because now what happens is you deviate from the plan, because the plan wasn't to trade because they took your money and now you won't get back. The plan was, it went to this level, you traded to this level, when it hits this level, you take your money, right? That's the plan. I'm gonna stop here. If it doesn't, now I'm angry and I'm gonna show them. Telling y'all, don't do it. Please don't do it. It's gonna be a long journey for you. And like I say, the way this market is, I've had a nice amount of years to kind of get it. But the way this market is, tomorrow it will change. And I just don't want you all to take 4 or 5 years or however long it takes to master this thing. Okay. So no, just don't revenge trade. Let me tell you something. If the market does something to you, if you lose, take that lesson. Just take the lick. You do not have what it takes to get back on the market. Understand that. I know we all thinking I'm gonna get them back. No, you don't. No, the market got a gun bigger than your head. You cannot. It will not work. They have infinite supply, so don't do it. Right. Key perspective. No single trade defines a trader's career, and that's it. That's pretty simple. Just keep perspective. Like, I took a nice loss. You guys hear me talk about it often, right? I still remember it like it was yesterday, but it didn't define me, right? So we all have some losses. Just it is what it is. As long as you didn't lose from deviating or revenge trading or doing something you shouldn't be doing, the losses are easier to handle. I'd rather lose because I was wrong or the trade went bad. Losing because I deviated and didn't do what I was supposed to do, it's not a good one, okay? So, avoiding emotional trading. Emotional trading occurs when you deviate from your plan based on emotions rather than analysis. That's something what we just talked about. And I'm going to keep repeating this, right? Because it's the same thing. Stick to a predetermined strategy. Whatever your plan was, stick to it. If you say you're going to get out at a certain point, get out or prepare to get out. If you say you're going to stop out at a certain point, if that stop loss isn't already set, and you're doing it manually, just stop out. Set specific entry and exit rules, including stop losses and take profit targets. Basically what I just said. Refrain from trading if emotions become overwhelming. Plan your trade and trade your plan. It's real simple. Plan your trade and trade only that plan. Okay? So let's go back to this one. Refrain from trading if emotions become overwhelming. I'm telling you now, if you're having a stressful day at work, if you're into it with your partner, if your sister's irritating you, something, your car's, if you are not mentally ready, or if you're not calm, or if there are things affecting your mind, just stop. Just do not trade. There's days where I do not trade. I got a very valuable lesson in this a few months ago. I woke up on a Monday and I literally said it out of my mouth. I'm not feeling it. I'm just not feeling it today. But I got up and traded anyway. And it was not pretty. So remember, guys, our mind is our weapon. It is our tool in this game. And if 90% of this game is psychological, then you need your mind more than anything. So if it's off just a little bit, don't want to use it. Like anything else, like at work, if you have a certain tool that you have to use, or a software, or if the internet is down, or something is affecting your job, it's going to make your results different, right? So it's going to make them probably not favorable. Same thing with your mind. When you think about your mind, maybe it's Wi-Fi, right? The Wi-Fi is acting up, you may not get your job done. Not well if you use a computer for work or whatever. Same thing with your brain, okay? Cool. So, conclusion. Trading psychology is a critical aspect of success in financial markets. Emotional control, discipline, and a sound risk management strategy form the foundation of a healthy trading mindset. By recognizing and managing emotional challenges such as fear, greed, impatience, and overconfidence, you can improve your decision-making and increase the chances of long-term success. The journey to mastering trading psychology is ongoing, but with practice and perseverance, you will cultivate the mental fortitude needed to navigate the markets effectively. Final thought. The key to trading success lies not only in technical analysis or market knowledge, but in the ability to maintain emotional balance. Developing the right mindset allows you to make objective decisions, whether in moments of euphoria or despair. Any questions? Okay, the end. So if you can't win it, you can't win if you're losing in your mind. Always prioritize your mental health. Your mind is your greatest asset. The end. So, okay. So no questions at all. Y'all just understand this stuff. Y'all good? Everybody good on mindset? All right, we can go.
Woo! Man,
Appreciate that. That was good. Definitely appreciate it.
I'm shocked that y'all don't have many questions.
such a refresher. So Meek is at
What's up, Jonathan? See you
so,
tapping in.
whenever she
Jermaine, what's
has a
up,
question.
bro? I saw y'all tap in as I was going. What's up with y'all?
So Meek is at work, so whenever if she has a question, she's gonna tap into the chat. So I'm monitoring the chat.
Okay, cool. Yeah, it doesn't seem like we have many questions. Victor doesn't even have any questions. I'm shocked. Did I just teach it well, or you just know it all? Which one is it?
Oh y'all,
That was
Oh,
pretty
it's both.
straightforward.
Yeah, it's both. You taught it well.
Cool. Yeah, it is pretty straightforward. And I can't explain to you all how straightforward it is. Like I've tried, but I'm telling you, you can't deviate in this game. Okay. Mika has a question. What's she say, Neil?
saying that when she's tempted to overtrade, she turns off her computer. Excellent.
Well, Meek understands. so you on point. Absolutely. You guys hear me say all the time, I'm gonna find something else better to do with my time. And that's one thing, you guys, we are smart individuals because we're in this game. And you signed up for this mentorship, so I know you're kind of smart. No, but just thinking about it, right? If this market is confusing you, step away. And anytime, like as Neil said, we've been in this for a while. When I'm confused, that's the first thing I do is step back. Because how did you confuse me is what I want to know. I'm confused about why I'm confused because it should be like this. But I also know that if I'm confused, I won't be able to hit my target. Make sense?
Do y'all have like market or hours, like open to like 11 or 12, or you just ride it out
Yeah.
until you're done?
Unofficially, I liked, as you know this already about me. I like to be done within the first 30, 40 minutes if I'm day trading. And then I could just manage my positions from there. Today, I think I was done about 10:30, and that was good enough for me. So I try to be done within that. If I am going to day trade, I'm going to try to be done within that first wave. And usually that is about till about what 11:30. I forgot the market cycles because they change a little bit, but till about like 11:30, 12, you start to see things slow down. And if the volume slows down, I think is it Europe market closes around that time or Germany? Forgive me,
Yeah,
guys. I don't remember exactly which one.
on the market.
I think it's the European markets close, and then a lot of investors go to lunch around that time. So if the people with the money aren't there, I don't want to be there either. Y'all going to lunch, so am I, because I need you all's money to make my money, right? So yeah, I try to set I have them in my mind, if I could be, the sooner the better for me. As soon as I make money, I'm done. Usually, unless we on Friday and I'm talking to you all and going back and forth. We do that till about 1 o'clock. But as you notice, it slows down. So usually we just end up talking about the market or anything else. So yeah, man. I try to be done as soon as possible, good fellow. So
Do you
those are
ever
my
double back, or once you close your computer, you're done?
So let me go. So
He asked me, how you gonna tell him what I do?
I'm
I'm
sorry.
just talking to both of
No,
y'all.
no,
but anyway.
no.
I'm anxious. I'm anxious for Wednesdays,
I'm
bro.
sick of you and your anxiousness, Will. I mean, not Will, Neil. No, I want you to answer it too. For me, good fella, I'm gonna be honest with you. Most of the time, I do walk away. There have been a time or two where I have been greedy, but it's not good. So yeah, now like today, yeah, I walked away. I went and did something else. Usually, I try to leave the house, or leave the office at least. But go ahead, Neil. tell us what you do since this is Wednesday. Give us your perspective on what it is that you do. Goodfella asked you the question.
But I thought you were asking us both. So, that's how I took it.
He said you. He didn't say is that what y'all do. He says that. No.
Okay.
We want your perspective, bro. I was just messing with you.
Yeah, for real. I know. It's all love. Absolutely. So for me, prime example, like today, I got into Amazon and was out by 10 o'clock. Literally.
I was done trading by about 10:30, I think. 10. Right up in there, I was done also. In between 10 and 10:30.
That is it. Now, I did double back, right? Now, the only reason why I ended up doubling back was because, just a quick rundown of how my day actually went. So my aunt, she just purchased what's that machine when you're standing on it and you put your feet
Elliptical, Neil.
Elliptical, right? So she purchased an elliptical and she wanted me to put it together for her, right? So I got to, after I dropped off the kids and my wife to work, I went to her house and I said to her, I need to go to work at 9:30. She's like, go to work at 9:30. I was like, listen, don't worry about it. I need to go to work at 9:30. 9:30, that bell rang, opened up my tablet, did my thing, got into Amazon, watched it fall to my take profit point, took profit. I took about 49% and said that was it, right? That was it for me. Closed the tablet, went and put the elliptical together, right? Went and got some lunch, boys, came back home. And then I said, you know what, let me just peek and see what's happening with the market, right? I just wanted to see, just because, it's just one of those things that you just want to see, okay, how's the market doing? Or better yet, how did the market turn out? Because I know when I last looked, everything was falling.
Right.
Right? So what did I see? Literally, as soon as I looked at SPX, I saw an opportunity. Right? And I am a huge believer in taking advantage of an opportunity during the lifetime of the opportunity. Right? I'm going to say that again. Take advantage of an opportunity. Well, it's a little bit more. I'm just give you the whole spiel.
You don't have to explain it, Neil. We're witnessing it. You're literally doing it as we speak.
Say less.
You're literally taking advantage of the opportunity during the lifetime of this opportunity. We get it.
Hey, Neil, you probably don't need no journal because you remember your day vividly. No, I'm just messing with you.
The man
I'm a
asked
very
about.
detailed person. That's what it is. That's exactly what it is. I'm very detailed. And believe it or not, me becoming so detailed actually came from me journaling.
Okay.
Like really, that's probably where it came from, because I would write something down, go back to it, and said, okay, that, because I went back to it, it triggered something. Right. And it all really full circle back into the market. I started journaling because of the market, because I wanted to make sure I understood what made me get into this play. Right. Was I emotionally driven? Did I do it because somebody said something about it? Did I do it because I heard something in the news? Was it a rumor? Did I read something? Right. That's how it really all started unfolding for me, which made me really take this game seriously. Right.
Sure.
So I saw the opportunity. I saw SPX bounce off resistance. Bounce off support. And I'm gonna talk about support and resistance on Tuesday, but I saw it bounce off support, so I already knew what was gonna happen. Literally. And I got into the play just in time, and I was able to take 89% out of SPX.
Good
And
job.
less than 5 minutes.
49% and then 89 on the. It's a good day.
Less than 5 minutes. Right? But what?
Less than 5 minutes you open and close?
That's it.
Okay.
In and out. I am a day trader. I am a scalper. Now, of course, I definitely do get into swing positions, but nonetheless, when I see profit, I take profit.
Absolutely.
When I see green, I take green. I'm not playing with these people because they ain't playing with me.
No. Alicia, okay, I think Vidal was first, then Alicia, then Mark. Go ahead, Vidal.
My question was like, as far as mindset, is there any like difference in the mindset coming from like scalping to day trading to swinging, playing leaps? Like, are there like tolerance changes on like, I guess,
Oh,
risk management or patience that you might give it due to time restrictions or anything like that?
I wouldn't say I mean it varies based on your risk management percentages, right? I wouldn't say that the plan really changes, right? But whatever plan you come up with should be based on the play, right? Day
Mm-hmm.
trade is going to be one set of one strategy, right? Swing is
Yeah.
going to have a little bit more time on it. So that's another strategy, and leaps are going to have a little bit more time on those, or even more time. So that strategy may be a little bit different just as far as, excuse me, your risk tolerance. But yeah, to answer your question, yeah, it changes based on the play, but like actual mindset and discipline and sticking to it, what you set should never change, if that makes
Okay.
sense.
Yeah, that makes sense. And one more quick question.
Mhm.
As far as like you kind of like triggered this question when you're just answering that. As far as like strategies or setups, do you have a different strategy or setup for scalping than a different one for swings and leaps, or do you just kind of
You mean
use them
take
for all? Yeah,
like the chart?
yeah.
Nah, mine's pretty. I understand it, so I pretty much use the same one. Uh,
Okay,
for me, because if I understand it on the small scale, I should understand it on the large scale. So I try to
gotcha.
keep it the same, because you just change it. You just changing the time frames and but nah, you want to get something because what you want to end up doing is tricking yourself, right? You want to do something so much over and over and over that subconsciously that's all you really do. That's all you really know. So I wouldn't. I mean, I wouldn't encourage trading different setups. I know Mark has different setups, so he could touch on that when he speaks.
Okay.
Good, you good with all?
Yeah.
Alicia, did you not have a question anymore?
You know, Neil started talking and I actually forgot
Yeah,
what I was gonna ask.
yeah.
But you know what? We got time and it's all good. I'm sure it was strategy.
When I saw the head go up and then it went down, I said, "Yep,
I forgot.
yep." She lost it.
I'm sorry.
Go ahead, Mark.
And so those are some great questions you guys are asking. What I wanted to say is just kind of like what Neil was saying. Depending on what approach you take, like some moments I day trade, some moments I'm a scalper, some moments I'm a swing trader. But what I do is I start from a further out time frame and go ahead and prepare my levels ahead of time. And I usually stick to those levels depending on the contract expiration date. Now, of course, if we're looking at something same week, which I highly recommend you don't do until you get to that level, then of course I won't be moving as fast. But one thing that I've found is that looking at multiple time frames, once I've already mapped out my levels, and I know King had mentioned that I have several different strategies that I use, but truthfully, I'm only using one, and that's looking at the trend lines and following the volume price of the candles and of course the trend. So if I'm catching a trend, I usually just take my profits at my initial target price. I might leave a runner, but I stick to the plan. And at the end of the day, that's how I'm able to have those consistent wins. And then like today, 10:30, I was really done trading. I went for a walk, and took care of some other stuff. You know what I'm saying? So, don't be afraid to just say, okay, I'm done. Let me do something else. I mean, because there's always plenty of other things you could be doing. Like, for example, going to the gym and something I need to do better about. You know what I'm saying? So, you don't have to trade all day. Now, you can go back and look at the charts and prepare for the next trade, but don't sit in front of that computer all day. and trade. You know, you'll end up over trading, just like we talked about tonight. And that's just not a place that you want to be in. I mean, we've all done it. But once you get to the point to realizing that you don't have to do it, life just seems a little bit more sunny. You know what I'm saying? So I just want to drop that on you on those questions. And I hope that helps you, Vidal, and you as well, good fella, since I heard you guys mention some things earlier.
Thank
Sure.
you.
Appreciate that. Yeah, I was referring to you having different setups and just with the chart. I think he was asking about like if you use like the 3 kings 6 rings for this and then use flawless for that and this, this for that. So that's what I was referring to, but appreciate you. Cool, cool.
So hold up,
Victor?
Alicia has a question. She says, I'm ready to learn how to set up stop losses. So Mark will actually be going over that on Monday.
Yep.
So just be a little bit patient and want to cook when it comes to stop losses on Monday.
For sure. iPhone, I'm gonna put you on mute. Your mic is open and I don't think you know. So I just want to mute you so we don't hear anything that wasn't intended for us. Go ahead, Victor.
So I got a couple questions. One's for Neil, and then the other question is for whoever wants to whoever wants to go ahead and answer. But this is something from my journal that happened to me today. And normally, like I said, I don't even trade all day. But I did watch the charts all day because I was trying to get used to these candles. So the first question is, I was looking at the candle, and I think it was on the 2-minute chart. And then it was almost the candle was a 2 since I have that indicator on. But then right at the end of it, before it closed, it turned to a 3. Now, I don't know if my eyes were tricking me or something like that, but I thought it was like once the number comes up, it can't change. Or did I hear that wrong?
So what do you mean by it can't change? What do you mean?
So say, for instance, remember how we were talking, I guess, yesterday when you're explaining these candles and you have that, I think it's like the strike close. So the number that pops up right when that candle comes, it was like a 2. And then before it got completed, it turned to a 3. So it was almost like it kind of switched me around because I was thinking the next candle was going to be a 1, but it wasn't a reversal. It was pretty much still kind of going the same way. So do those numbers change before the candlestick actually is completed?
All right, so the best way to answer that is this. So you got to remember, right? So each candlestick is representing the volume of buyers and sellers, right? So if at the open, and this is a bullish, a bearish candle. So if at the open, the volume is in the seller's corner, so that means the candle is going down. And then if, let's say, midway before it actually closes, now the buyers, the volume of the buyers begin to take over. So now it goes up. So that would make that 2 candle because of that momentum. If it was that momentum to the downside, but now the buyers have taken over. So now they have come in and changed that momentum. So now that momentum is going to be pulled upward, which made it turn into a 3 candle. Because remember, the 3 candle represents the change. The trend is getting ready to change, or the momentum is getting ready to change, right? So whenever you see that 3, it just simply means that the other side has now taken over.
Okay, so it doesn't mean necessarily if it's going down now, it's about to start looking like it's going up.
Right, it's just simply reversing. That's all.
Bet. Okay, that makes sense.
Keep in mind that every single candle we're looking at is just a representation of who's in control, whether it's a buyer or a seller, or bull or bear, whichever term you prefer to use, right?
Okay.
It's literally as simple as that, right? It's letting you know who's in control.
Definitely. And then appreciate that. And then this is for whoever. I know it's a Wednesday night, but this is for whoever. So.
Oh yeah, I mean it's fair. It's 2 of us. I mean, we'll handle it like gentlemen.
For sure.
All right, so I picked a contract because, I didn't normally I wouldn't trade this late, but I just kind of like Neil was talking earlier, you take an opportunity, I guess, for what did you say, for the lifetime of the opportunity. So, I just knew Trump, anytime he's coming on, making the little tweets and stuff, and I knew he had to, sign these documents for the tariffs. But something was telling me, Palantir was, might have a little bit more to fall. So I picked up a contract, but I didn't want to, since it was already had been knocked down, I think about 4.5%. I was thinking it was going to bounce, but then it was starting to show me that the strength wasn't there. So I picked up a contract, but normally once it gets so close to that support or looking like it's about to bounce, that's where I'd be real cautious. So I picked up something. My question is, I wanted to know what's better when you're picking the contract? Because if you're picking it in the money, and then also with a longer date, because it was almost like I picked it up, I think, all the way out for close to a month, but I also got it maybe for, I guess I got a 90, I think it was a 96 or 94 put, but it was already at the price of like a 91. So I got so far in the money to make sure I wasn't going to lose theta, lose the value of it, and things like that, just in case it backfired on me, popped up in the morning and, play that zigzag on me. So what's the best way you would want to pick a contract? Or should you be picking a little bit out of the money, but just get a further date?
Oh, I'll take that one, Neil. Oh, Neil's on mute. How did that happen? Oh, Neil, could you unmute yourself? Would you like to answer this one, Neil? I can't hear you.
That's how we playing now? Word? It's like that? Oh, okay. I got
you. You left me with no choice, man. No. Okay, so let's try to dissect this a little bit, okay? Because you said a lot. So you got a contract on Palantir, and you got what? $94 puts or $91 puts?
It's a 94 because the price was at 91 when it happened. But like I said, it was getting so close to that, almost looked like it can bounce. So I just wanted to go ahead and get farther in the money, just so I wouldn't, if it did bounce in the morning, I wouldn't be, I guess, screwed. I guess I'm trying to not use profanity. So yeah.
Oh, okay. Let me explain something. No matter what striker price you pick, if it bounces, you're gonna feel it. Okay. You can't get away from it because you bought deeper in the money. Now, yeah, it may change. It may not hurt you as drastically because the Greeks are gonna be different.
Mm-hmm.
But if you are in the money and it bounced, you now gonna be out the money or closer to getting out the money, right?
Okay, good.
All right. So I want you to understand, just because you pay more for the contract and you bought, it ain't gonna save you if that thing bounce. Because what happens is this, right? The contract is the product. So let's say you paid $5 for the contract. If it bounces in the morning, nobody's gonna give you $5 for the contract. They're gonna try to give you $2 for the contract. You see how the loss happened there?
Yeah.
You
so
paid.
I should have waited until kind of morning to see what. But hopefully, I got faith in Trump. He'll say something even more stupider and scares the market. I think it's already down like 2% in aftermarket. So hopefully,
the market is definitely gonna move with Trump because he's definitely volatile. But that doesn't mean Palantir is gonna move.
Yeah, that's true. That's true.
So when we go to buy these products, we want to make sure we do ample amount of research on them.
Yeah.
We don't want to go off of how we feel or what we think or a hunch, because you are going to realize that your feelings don't mean anything in this game.
Yeah, definitely.
Yeah, sometimes we have a feeling, but you better back it with some technical or fundamental analysis.
So I did. I mean, it just looked very, very weak. But like I said, I had that doubt. And then I didn't know if it was like, what do they call it, analysis paralysis or something. But I seen the charts. I was reading the candles. Everything was looking weak. Plus, they had the extra, cheese on the top with, these tariffs and stuff. So it was just something was telling me, hey, go ahead and take this trade. Don't make it too big, but big enough to where you ain't gonna be, hurting too much. It ain't gonna be your account.
Quick question, Vic. What the hell do you do for a living? because you always got money to give to Palantir, man. I got Zelle, man. The other day you said I just let it roll. Then today you said I had a hunch, so I just bought a few contracts. Let me tell you something, man. You're getting close to gambling, bro.
Yeah.
Be careful, because when you're making decisions without enough information, you're gambling. Okay.
Yeah. That's
So
true.
we don't want to go off the hunches. Those are called lottos. And
Yeah.
those are all fine and dandy once you get enough of the market's money. If you got a lot of the market's money, then you can do some lottos because it's their money. But if you're
Yeah.
still learning and you're trying to get to a point where you got a lot of house money, be careful.
Oh,
Cherish
definitely.
every dollar.
No,
Because
oh, go ahead.
what you gonna say? Oh, you got all the money? All right,
No. I was gonna
keep going
say,
then.
no,
You
I
got
took a
it.
big loss, so I definitely learned a lot. God had to sit me down. I lost over about $250,000 in the market, and then I think it was one of the ladies was saying that it almost made her not want to do it anymore. But I took like a year off, but I shouldn't have. But I definitely had to learn some lessons, risk management. So now it's like if I have enough knowledge, enough stuff telling me to go with this, then I will still do the risk management, make sure I'm not placing too big of a bet because I can't take the, I was trying to figure out how
I
to
hear
get
what you're
back to the
saying.
market.
I hear what you're saying, but it all add up. Because I'm
No,
telling you
you're right
this,
though. You're right.
those few, those, as they say, twos and fews, or the smaller, those dollars add up, man.
Yeah.
You gotta remember, it's like we throwing dirt into a hole, So if you are not adding to the hole and you taking away, eventually you're gonna feel it.
Yeah.
And then what you do is, just to be real, you trick your mind into thinking that type of stuff is okay.
Mm-hmm.
And you may not experience it now, but you may think it's okay when it's too much money on the line.
Yeah.
So
You're right.
how you do small things is how you do big things. So I want you to be very careful, especially while you're in this mentorship, with taking those trades on a hunch,
Yeah.
because going deeper in the money, it's not going to save you. The Greeks are going to be a little bit different if you would have went at the money, but the way these contracts work is that if nobody wants them, it doesn't matter, right?
Yeah.
Or if they're losing value, it doesn't matter.
Are we going to go over how to, which contracts, what to look for as far as like open interest and okay, but I'll wait till we get there then. But
Yep. I would encourage that you hold off on taking those trades, and because there's some things that you may see instantly, like, oh, should have done that.
yeah.
Okay. Because going deeper in the money to you can't run. You can't run from the market. It's gonna find you, man. So, but again, what was the strike? I mean, I was strike. What was the expiration?
Expiration is, hold on, let me look this up real quick. So the expiration date is April 11th. Strike price is 94.
April 11th.
Yeah. So it's about 2 weeks. About 2 weeks. A little over 2 weeks.
2 weeks for the money, and you think, let me tell you something, Vic. If it does bounce, you may not have enough time.
Oh,
So
no, yeah, I'm definitely.
2 weeks ain't enough to be playing like that, man.
Now, what would you get for something like that? Would you have it at least a month out, or what would you get on
I
your
don't
return
fully
date?
understand what you saw to make you take the trade. So you said it looked weak, and that Trump is gonna say something crazy, so that's gonna make the market go down.
And there was a couple other things. It was just every time I guess on the way my chart is set up and the indicators I have on there, and then how I was kind of, watching the candles. Even though the candles, that's my first day of really, really watching them. So I know I definitely knew that, huh?
Today was your first day?
Yeah, that I took it serious and just said, hey, I'm staring at these candles. I even turned off some of my indicators at some point in time just to really try to kind of guess, like how Neil was doing yesterday, just guessing which kind of number is going to pop up based off of how the candle's closing and all that stuff, the wicks and things. So, but there's a few things that really just stood out to me and said, hey, I know it's a little bit of a risky play, but once again, I'm not going to go so deep to where it's going to put a big dent in my account to where, you know, if I do make that mistake, then I have to see, hey, where did I go wrong with it? And then how can I do better on it? But if it works out for me, then
you're going to convince yourself that it's okay to gamble.
Yeah,
And now you're screwed because
you're right.
your mind is going to think that's okay. You up a lot more.
Yep.
And we want to be careful with those lottos, especially in it. And especially since you're in here to learn, there's more things you have to learn. You're just kind of filling out the candles. I would make sure I understand those candles very, very well before I make any more trades. But I know you're not going to listen to me. So, because y'all never do. You guys are grown with your own free will. So it sounds like a cool story, King, but it's not going to listen. So you're going to keep trading. One thing you are doing is that you at least limiting your capital size.
Most
So,
definitely.
you know, you kind of like one of those people like, I don't like cocaine. I just like the way it smells. What? I'm not gonna gamble, but I got about 400-500 I could lose.
Yeah,
brother.
I don't know nothing about that.
Brother.
Hey,
Ew,
I got
man.
nah, I don't know nothing about that.
No, I understand.
I get what you're saying though. No,
Yeah,
you're
it's
right.
like you like, well, I ain't doing that, but I'll do a little bit of this. No, man. Because how you do small things is how you do big things. So I want you to encourage you. I'm not mad at you doing it like this because some of us have to learn like this, right? I'm trying to prevent you from learning on the chin like I did, and like you learning, right?
Yeah.
But sometimes the only way to see it through is to see it through, right?
Absolutely.
Sometimes the only way to figure out to get clarity is to take action. Okay.
Yeah.
So I get that, right? Well, I do commend you on not going too deep, right? Or doing too much. And you are at least trying to mitigate your risk by going deeper in the money and this and that. I think that as you learn how to operate this machine better, there's going to be some things that become more and more clear to you.
Absolutely.
So I would just be careful. It's like I say, the analogy, like you got a brand new car, you just got your driver's license. You maybe don't get on the expressway just yet. Okay.
Absolutely.
Absolutely. You getting in the express lane. I already see what you got going on. Like, what's this button do?
Just push that Dodge button. But no, I definitely respect that. And no, I agree.
For sure.
I agree.
Well, I hope did I answer your question properly, bro?
No, absolutely. Absolutely. And more. And thank you, Neil, too. You did too.
Yeah, cool. And so when I teach, I like to talk to you all, but I like to talk about real life stuff and joke, right? Because what people don't understand is you may not remember what I said, but you will remember how I made you feel. And if it was in a joke, it's easier to remember. I guarantee you, when you start looking at the contracts, you're gonna be thinking about other things. Like, wait a minute, I don't do coke. So, I'm sorry, guys. I went off topic, but either way, I guarantee you this is a moment we'll all remember. Okay. Any more questions?
But I just want to piggyback off of King real quick. Listen, when in doubt, stay out. It's that simple. It is that simple. And I'm still trying to figure out, so you got into a put or a call?
No, I got into a put. I wanted to get in the call, but it was just it was just everything I was seeing was telling me that it wasn't going up or wasn't bouncing just yet. Now, the reason why I wanted to get in a call is because like every time I'm watching Palantir, the way my chart is set up, it's like when it hits a discount level or it gets close to hitting a support line, it doesn't bounce up. So I get in the call. But something was just telling me, and then especially with the news we got out, I know it's fresh news. Trump was running his mouth before I got on here with y'all. And actually, I look at Palantir now is down 2%, so that's good right now. But that don't mean that pre-market is something totally different. So something was just telling me, hey, I don't know if it was my spirit or what, but like I said, I didn't know if it was just my good thoughts. So I said, hey, let me mitigate my risk. Let me just put a little lotto play and just say YOLO. Something small. It ain't. I'm gonna learn from it regardless. But it's yeah.
Ain't nothing to a boss. I get it. YOLO. You
So-
only live once.
So you got into a $94 put at $91?
Yeah, so it was, because I wanted to get in the money. So, and I didn't know, since I didn't want to spend so much, I didn't know if it was like gonna lose. I seen that the theta was lower than if I would have got, say, for instance, maybe a nine, right at the money, pretty much. And the reason why I didn't do that is because, once again, Palantir, in my mind, it wasn't going to lose as much value that quick, because in my mind, Palantir is a strong stock. So when it falls down like that, unless it has a reason to keep falling, then it kind of does it just reverse. But it was like the whole time it just kept falling, and then something else told me, hey, just go ahead, set yourself up for tomorrow, because I know how the market kind of usually will try to move those big swings during pre-market, to where people can't necessarily, I guess, get in unless they're already in for the long term. So I don't know, some just kind of told me, let me play a quick lotto put, and just, if I'm wrong, then hey, we're gonna take that loss, take the L real quick, but we're gonna learn from it, and we're gonna journal it, and we're gonna come back, and we ain't gonna do it again. So
That hunch, man. That hunch.
hey, King was talking about that adrenaline earlier, so
Yeah.
Yeah, and I seen your shoulders move when I said it too. Yeah. Yeah. Rewatch tonight. I want you to rewatch tonight.
I definitely will. Definitely will. I'm
But
gonna
be
hit
careful.
Yeah.
Careful. So Alicia said, I'm glad it was a put instead of a call. Me too. He definitely YOLO. Can you explain the risk of that play? What do you mean by that, Alicia? If you can come on real quick and just
Yeah, sure. You asked the amount, $91, right? And then when it was confirmed, it was $91 down. So then you both, Neil and King, chuckled. So I guess there's a risk there. But explain why you both kind of like, oh, okay.
I've
Like
been chuckling this
I
whole
mean,
time.
I mean, I'm just saying, like, explain it to us, like, like we're fifth graders. Like, okay, why is that
Can I please have this one, Neil?
Oh,
OMG?
absolutely.
Yeah, okay.
Please. So
It's Tuesday. Wednesday. Please go ahead.
yeah. So let's say it's Wednesday. What time did you buy this?
I bought it today.
Today about what time?
The time I shouldn't have been trading. I think it was about like.
Don't worry about it.
I waited for it to go up, because I think it came all the way down to like 90 or something. So I waited for it to go up. But it was right back, I think, like 240, maybe 230, 240.
Okay. So
Which I never do. Like I said, it was just something to really just set me up for tomorrow, just in case I was right, just in case. But it ain't
I
gonna be.
don't know if you never do that. I think you do that a lot.
No, I really don't. I really don't, because
Okay.
Mark had said something about it. He's like, he don't never trade during power hour, because once again, it's all over the place. The most time I like to trade is that first hour, and then I wait 15 minutes after the market's open, and then I'll trade maybe 2 hours after that. So sometimes it'll go a little bit longer, but yeah, no, I never do it. It was just a lot of. It was just a
All
lot
right.
of.
Well, we're gonna see how this play out. It was literally
But
so.
you accomplished one goal, and that was set yourself up for tomorrow.
He did something right. Listen, you can find the good in anything, guys. So, Alicia, I'm going to explain it to you in a fifth grade level. What Victor said is, the market has been up and down all day. I'm bored, so I'm gonna go get a lottery ticket and see what happens. That's it. He said Trump is gonna speak, and Trump, he didn't really think about what Trump was saying. He said,
my eyes were hurting from watching these candlesticks all day.
yeah. So that's how they get you. Let me explain something. I'm glad you said that. This is another reason why we walk away, because this. So you sitting in an office chair, right? That's an office chair. There's one that swivel.
Yeah, we in the office.
If you sit in that chair and from 9 o'clock to about 2:40, you spin around in that chair in circles.
No, I got the
And I
weights.
come and say, hey, Vic,
I took a break.
get up and walk a straight line. Would you be able to do it?
Yeah. And I got the workout right here, and then I had to do some meal prep and stuff like that. So yeah, I was doing other stuff, but I was really trying to focus.
No. You ain't hearing me.
You say,
If you sit in that chair and you spin from 9 a.m. to 2:40 in circles and don't do anything else, when you stand up, are you gonna be dizzy?
Oh yeah.
That's exactly what you did in the market.
Yeah.
Watched it all day. You let it make you dizzy, and then you said, I think it's a good time to buy a play. You dizzy. What are you doing? That's the absolute worst time, man, to be making decisions. This is why we walk away in all seriousness, right? This market is they understand us. These computers study us, they see our indicators, they know how we trade, they know everything about us, right? Everything we do is on the computer and it's recorded. They know everything, we're doing. So it is very easy to trick us, right? But you have to opt out. You have to say, I'm not gonna get tricked today. I'm not gonna be a part of it. So for you, just try again tomorrow, because I cooked you today. No, but it might work out for you though. I really hope it does. And as of right now, it probably will, because Palantir is at $90.
Don't jinx me right now. Don't jinx me.
No. See, that's the thing. That's the thing. You can't get jinxed in trade. Ain't none of that luck, jinx, none of that. It don't work. Like you gotta keep the energy outside of the chart. Okay. And I'm telling you, man, I got great energy and I got a lot of good energy. But when it comes to this chart don't care nothing about how I feel. So you want to be careful, man. Because like I say, we just don't know how the market is going to interpret the news. Tomorrow something could come out about what he said about he just announced the tariffs, and you're in Palantir, that could be good for Palantir, right? We just don't know how the market don't know how it's gonna take the news. So again, I really hope it plays out for you. I promise you. I hope everything you do plays out for you. I hope that, but I want you to understand that hope isn't a strategy, right? I hope that we all become millionaires and make all the money in the world. But when it comes to this computer and this game that we in, it doesn't care about your dreams. So you have to, as they say, stand on business. And today you did not do that. Today you got a lucky shot. Hey, listen, it hit, but you better be careful, man. Okay, because when that thing fall to $88 tomorrow and you make a lot of money, you gonna be like, man, you gonna think that's the way. Meek said, I did that before I got burnt. With Palantir, it fell fast. Yeah. See, that's the thing. With them stocks that move like that, like Nvidia, Palantir, Tesla, they get so heavy, they fall fast. And that's why I love playing puts. Price fall faster than the rise, and I'll be right there to catch it. Thank you. But I got a strategy on why I do it. You just told me all the wrong things, man. You said, yep, today was my first day ever looking at the candles. I never really understood the candles, but today I was kind of working it out. And then I stayed on the computer so long, I got dizzy and I got bored, and I decided, let's spend some money. And Trump gonna say something. He when he talk, the market go down. Not all the time. See, and that's another thing that you all are getting set up for. Trump is going to start to say things that are positive for the market, probably. And everybody's going to be thinking, oh, Trump is coming on, the market's going to fall. We did the same thing with Jay Powell. Oh, Powell speaking, the market's going to fall. Nope. And the big boys are sitting back waiting on all the retail guppies. Like, yep, they look at them puts and they see them coming in. Boom, 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 boom. They like, hold my beer. Watch this. So I don't want you to get caught up on any of those types of things, man. I want you to be really careful with going off of these hunches. And I want you to slow down, man. Jesus. You must got Fort Knox over there, man, because you just like, I lost a quarter, I got more. It's more in the back. Like, chill, man. Chill. I ain't even lost that much. That wasn't enough.
Hey, he took that trade during nap time too. He said it was nap
Say what
time in the
happened?
chat. He said it was nap time in the chat. So he took it during nap time.
He said he was going to take a nap. And he did.
I think that might have
That's
been
what I
after.
read.
I think that might have been before. I had to look at the times, but I think the trade might have been before that.
It was before the nap or after the nap.
It might have been. I got to go look at the time, but I took the trade about like 2:30, 2:40. So
Oh, wait,
okay.
Central or Eastern?
I'm Central, Midwest.
Oh,
Yeah. Yeah.
Boy.
Oh.
Jesus. You talk about he went and took a nap. I bet he did. The market had already whipped him. He'd been whipping his head all day. Victor, man, bro, we got some work to do, man. Like, you negated all the mindset things tonight. I'm glad you're saying all of this because it's good to know, man. But be careful, man. Be careful. Like I said, let's talk about some things you did do right? You did set yourself up for tomorrow. You did buy enough time. I would have bought a little bit more, but 2+ weeks is good enough to manage the position, right? You try not to put too much on the trade, and you attempted to buy so deep in the money that you could escape the raft. So you had it's like you had a good heart. It's like you had a lot of good things that you were attempting to do, man. And you get an A for effort, bro. But be careful, bro. Be careful. And everybody else, all jokes aside, man, be careful. And taking trades 10 minutes before the market closes is not encouraged, especially after you've been watching the market all day and get dizzy. Okay? Go ahead, good fellow.
No, but those were what my question was about earlier too. Basically, I know a lot of people go back after they play earlier in the day for power hour, and I didn't know if y'all go back for power hour or y'all just stay away from
it. Neil might.
Once I
yeah, he explained it, but yeah, that's what my question was about earlier. Just if y'all do the power hour.
Yeah, no, I really try not to. If I take a trade later in the day, it may be to set me up for the next day or week or so. But it is very rare, especially if I won. And I'm gonna tell you something. If I didn't win and I lost more than once, I'm done for the day anyway. So if I take a big enough loss, it don't matter what's happening. I'm gonna go somewhere and find something else to do. Okay. But usually how it's been going, I win in the morning. And once I win, why would I go back for power hour? You never return to the scene of the crime. Allegedly, I've heard. I don't know that for a fact, but just saying, I already stole the money from these people. I'm not about to give it back. You don't rob a bank and then go set up a checking account. No, I took the money. I'm gone. See you later. I'm going to the beach.
That's it. That's it right there. That's it.
Vidal, you had a question?
Yeah, I'm gonna go ahead and ask it. You just sat there and said, if the loss big enough, you'll cut it out for you done for the day. So is that if the loss big enough by percentage wise, like well dollar amount wise, but percentage still the same, or are you saying like you just kind of broke a rule and then use a stop loss type thing?
Well, it's gonna be both, right? Because sometimes these trades do get away from us, right? And at the point I'm at, I don't really use the order bracket stop losses as much as I should. Okay. I use trailing stops, like when I want to just get out of something with profit once it's already going up. I will use those. And again, I use a manual stop loss, which is myself. I'm looking at the levels, I'm looking at the percentages, but if something beats me bad enough, I'm done.
But
gonna
if we
feel
use
when
our
I get
stop
back.
loss, that shouldn't happen, right?
You say
As
what?
far but if we use our stop loss as far as like what you're saying right now, we should be using our stop loss so that doesn't happen.
You should use your stop loss, but sometimes these trades will blow past.
Gotcha.
Sometimes they don't get filled, and that can happen. But
What causes something like that?
the orders, they don't want it at that price. If price is moving too rapidly against you, you can't force sell something.
Okay.
Let you do like a market, but if you got a stop limit and you set it at $3 and the price of the contracts, nobody wants it for $3 because the stock is going against
Yeah.
you so fast, you can put it at $3 all you want to. But it may blow past it. So that also happens. But again, for me, I just kind of know when enough has been enough. And it depends on how I took the loss and why and what's going on. Sometimes they trick me, and when they trick me, I'm like, oh, I don't want no more parts of that. Nope. I see what y'all doing today. I'm gonna get out the way.
That's my struggle.
It
No.
also depends on when you're using your stop loss. It also depends on the brokerage you're using as well. Because I've heard stories in regards to Robinhood that an individual have their stop losses in place, but one of the main reasons why that specific stop loss didn't execute was because the order it fell in, right? So if there's let's say for example, your order number 99 and they're only at order number 4, right? So if by the time they reach order number 99, it has already blown past that stop loss. So now let's say your stop loss is at 10%, but now by the time it catches up, by the time Robinhood catches up to you, you've already misplaced 20%, right? So
Gotcha.
with that as well.
Gotcha.
I don't know how true it is, but I've just heard multiple stories in regards to that. So just be careful.
Yeah,
Gotcha.
stop loss isn't magic. It's just an order to get out.
Yeah.
And if nobody wants it at that price, it's not going to feel. They're not going to be like, okay, you being good today, you sticking to your plan. We're going to go ahead and give you the money for that contract. No, somebody has to buy it. And like you said, so what?
I'm sorry about that, nigga.
No, but like Neil was saying, if there's a lot of orders at that specific price, because it may be 1,000 other traders that thought the same thing that you did and got 30% stop loss and put it in at that point, you got to get in line at that point. And there's not a lot of people, if the price is going against you fast, it's not going to be a lot of people like, oh, let me buy that losing contract. You know what I mean?
And then also think about it from this standpoint too. Let's say it's at the end of the day and it's getting close to your stop loss, the market closes. Now, post market, it has gone past your stop loss. And then now tomorrow's pre-market, it is further past your stop loss. So now when that bell opens, you cooked.
Yeah, that's what Goodfellas said in the chat. It could gap over it too.
Yep.
So you want to be careful, for sure. But definitely settle, because I would rather you do that and then just have to go in and manually adjust it than not have it at all and it just go against you. And now you're just chasing. And once those emotions get to swarming around, you start thinking all types of stuff. So cool. Did I answer your question?
Yeah.
Okay, cool. Okay. Do we have any more questions, comments, or concerns? It's about 7:48. We're gonna wrap up for tonight. Victor, thanks for playing. We appreciate you. No, but Victor DM'd me and told me that I can go as hard as I want to on him. He don't know what he just did. So we gonna get you straight.
Hey, where you from?
Where I'm from?
Where you from?
Chicago.
So you from Midwest too?
Yep.
Okay.
I'm from Chicago. Where you from?
St. Louis.
I
Yeah.
was gonna say St. Louis. Yeah, I
Yeah.
see. I see now. Y'all got switches. Never mind. I see. I see. Well, you on the YNs, ain't you? No, but no, man. All good fella from Gary. I ain't know that. I didn't know you was from Indiana, bro. Oh, cool. Yeah, we right there. Uh, she said intervention time. Listen, Alicia, we gonna get them. We gonna get them together. We gonna work it out, man. But yeah, no, but all jokes aside, I'm glad you all made this not just boring or whatever. I'm glad that this was we were able to learn and laugh a little bit. Does anybody have anything they would like to say? How do you guys feel so far? It's third day. How do you guys? Oh, Jonathan, oh, you from the Shy? What's up, bro? For sure. So who is that iPhone? So I'm from the rack too. Who is iPhone? What's your name in the Discord? Because it's just showing up as iPhone right now. Well, come on and say something to us if you're not at work. Yeah, we deep in here. Chill out, Victor. Yeah, yeah. And then we gonna go and get Goodfella too. That's Chicago land. So yeah, we deep. No, but if anybody has anything, iPhone, what's your name on Discord though? I can't tell who that is because it say iPhone.
Yeah.
But you said you're from the rack, so I know you from Chicago for sure. But yeah, so
Before we do tap out, there's two things. 2300 at work. So before we do tap out, there's definitely two things I want to touch on with you guys in regards to the mindset.
I wasn't even done.
Oh, my bad. I thought you were going to wrap it up.
I was gonna give them an opportunity. I was saying
Oh, I'm sorry.
it's been 3 days of the mentorship, and then I started looking at the chat. So my bad.
Okay.
Neil was like, "You paused." It's over. No, so
I swear, I feel like I'm. Is it time yet? No. Okay.
all right. Well, I'm gonna say this last thing. I would like to hear from some of you all how you feel about the mentorship or how it's going, because this is day 3. And a lot of you all aren't talking as much. You at work and things like that. I'm just wondering. This is how we kind of gauge how we're gonna move forward, and if we need to alter some things, or how are you all feeling about the mentorship in general. Vidal, you don't have to go, man. You said enough the last one, man. Yeah, but if we can hear from Victor, Alicia.
I think it's going well. It can speed up for me. I got ADHD though, so I'm like I could take it like. Let me pause on that. I think you could go a little faster than what we're at the speed that we're going.
Okay.
I think we go a little faster than the speed that we're going, but
It sound like she got that
everybody.
adrenaline too.
What you say, Victor?
It sound like she got that adrenaline like me too.
Yeah.
So it's slow down.
No, Victor. I don't have it like you. No.
No, no, you're a special
No.
breed, brother.
I'm down with the strategy, and I'm not with a hope and prayer rolling dice. No, that's not me. So I'm trying to learn the strategy here, and I'm taking it. I'll take the action slow, but the knowledge it can go a little faster for me.
Understood, and I understand that's your perspective, but we have to lay the foundation, right?
Yes.
We gotta
Yes.
lay it, and we gotta lay it sturdy, because by week 3, you guys are gonna forget a lot of this stuff, right? So
Okay.
we kind of easing you all into it for a reason. If we speed up, you guys are gonna miss a lot of things, and you're gonna misplace a lot of funds. So
Okay.
just
I'll
be
take
patient with
your
us.
guidance on that one.
Just be
And
patient with us. Slow down a little bit.
okay. Okay. I'm here. That's my only feedback. Everything is great though. I like all the slides and all the information that you're feeding us. Thank you.
Cool, cool. We appreciate you. Victor, you got something to say? How you feel?
I mean, you know how I feel. It's definitely well, actually, I'm gonna be honest. I feel like I want my money back and all that stuff. Nah, I'm just messing with you, bro. But nah, definitely been a great experience so far. Like, it's the third day. Definitely learned a lot now. I've been trading for a little while, But once again, I wanted to take this 100% serious to where I'm pretty much pushing off all my other stuff, all my other activities, and really sit down to where, my goal is to be making, 10 grand every week. And then for that to even turn into possibly 10 grand every day. So it's, like I said, it's been a blessing. So
That's the way to do it, for sure.
yeah, great knowledge too.
For
You
sure.
deserve every bit of that gold, brother. Every single bit of that gold.
Yeah. Meek said, I
Focus.
really enjoyed. Oh, sorry. I think we have a delay. I think that's why we talk over each other. I think there's a delay somewhere.
Okay.
Because I think you were talking. No, seriously, he was talking and I started talking. So you want to read the chat, Neil?
So Meek says, I really enjoy it. Very informative. I feel safe here. Well, thank you. Definitely do appreciate that, because this is indeed a safe space. And the only way you will be able to digest this like you need to is if you feel safe, right? Kick back, relax. We got you. We got you. And that's from the heart. Like, we really care about your success in this game. And all the information that we share with you guys, we are telling you guys this information through our experience. So when you look at what you paid for and what you're gaining, you pay for our experience so you can take gains out of this market. Like you, Victor, you deserve 10K a day in this game. Every single one of you, whatever your goal is, you deserve it. And the only way you are going to get it is if you believe you deserve it. Right. And you got to be serious about it. I say this thing with my wife every time we're out late and we come home. I'll say, I'm going to tell the universe I need a parking spot right in front of the house. And literally, I'll say it, universe, can you just please have a spot available so we don't have to circle the block a few times? And by just me asking that and me being serious about my request, I BS you not. More times than not, there was a parking spot on the block.
Manifestation, brother.
That's it. It's literally that simple. You just really gotta have conviction on what you're asking for. Now, of course, it's gonna come with hard work. Don't get me wrong, but nonetheless, you gotta be serious about what you want. Because if you're not serious about it, the universe ain't gonna give it to you. Is that a baby bottle?
No, he just like
I'm
a
like,
water bottle, man. What type of guy are you?
Hey, this ain't Minister Society, but
y'all are wild. No,
nah, this
but,
that lemonade. I beat that little powder stuff. I just put it in my water.
Okay.
Got me off of sodas and stuff.
You know they had those singles.
From this angle, it looked like a baby bottle. I apologize.
You know, Neil, at the supermarket they had these singles, right? And what they are is see, and nowadays they have where you can get Kool-Aid in a little cylinder, and it's made so you pour it right into the water bottles.
I got you.
All right, I'm gonna go past that, but no, Meek, that it really feels good to hear that because he said I feel safe here, and I've been in some mentorships that I didn't feel safe in, so that is what our goal is, to make sure that we give you all real factual information that you can use and make sure that you're gonna actually be able to apply it. But it's 7:58. I think everyone that wants to speak has spoke. Neil, you had a couple things that you want to do on the way out, and then we'll end it like that.
Yeah. So 2 things I want to touch on, right? Throughout this journey, you guys are gonna hear me say the term misplaced versus lost, right? There's one thing I've learned, and I'm still trying to figure out if this is a universal law or not, but when you really look back on, when you replay how many times you've lost something versus how many times you've misplaced something, what has happened, right? If you've ever misplaced something and you say, oh, I misplaced my keys or I misplaced my water or whatever it is, somehow, some way, You either find it or it finds you, right? But as soon as you say, "Oh, I lost it," it's gone. You've never recovered. And again, it goes back to the mindset, right? It's random. I mean, you'll almost never hear me say, "I lost money," but you will, majority of the time, almost always hear me say, "I misplaced funds," because that's how I think about this game, going right back to the mindset aspect of it, right? And there's one more thing I want to leave with you guys before we end the night. I want you guys to start thinking from a mindset of accumulation, right? Versus need. When you put yourself in the mindset, I'm in this game because I want to accumulate funds, or I want to accumulate assets, versus the need to have it, I'm telling you, it is going to change for you. And I'm telling you that from experience. Once I started operating from an accumulation phase versus because when you put yourself in a mindset of need, you're gonna do any and everything to get it because you need it. It's like a fix, right? And you're not gonna be satisfied until you get it. But once you start thinking from an accumulation level, now you're strategic. Now you're sitting back and you're planning, right? And then when you see that plan unfold, you just rinse and repeat. Now I'm gonna go over here and I'm gonna do it with this. Now I'm gonna go over here and do it with this. Now, I don't know if you guys have been following what I've been doing on Instagram, but look at the plays I've been doing. I'm up every day, 5:15 in the morning, doing what I do, pre-market analysis, setting up these plays. And I'm showing you guys literally exactly what's happening. And then I also showcase the results. Why? Because I plan, right? I'm strategic. I developed a strategy. And I'm telling you, once you guys really sit down and take the time and start to do that, listen, it is going to be a game changer. I'm telling you.
Put your Instagram in the chat for Alicia, or you could just say it. It's Market Heat.
Market_heat.
Yeah. So
Please follow me.
appreciate you, Neil.
Yes, sir.
Like Neil said, we want to focus on the ability to attract money, not chase it. Usually when you chase stuff, it runs away from you, right? So that's what we want to remember. And I'm gonna leave it at that so we don't go any further. So good night, good talk. See you guys Friday for live trading. And then Monday, we're gonna speed it up, Alicia. Don't worry. We're gonna speed it up. And don't tell us to slow down when we speed it up either.
I might do that though.